Hello, folks. This is Raj Sastri from Raj Option Trading. Today, I want to talk about one of my favorite companies in the internet and software infrastructure area. So, it's called Cloudflare. The ticker symbol is NET. So, Cloudflare is, it's named as a leader in DDoS. That's the distributed denial of attack protection. This is when you can't reach a website because there is a lot of people calling the same website at the same time due to malicious activity. And Cloudflare is also named as a customer of choice by Gartner. And this is the image from Cloudflare website. So they really protect your internet presence. So these guys are really good. They do both content delivery network, like companies like Fastly and Akamai. They're also into security. They will secure your internet and your infrastructure also. And because everybody's trying to shift towards on-premise to cloud, these guys are really taking advantage and signing up huge customers. So with that, let's look at some of the key customers of Cloudflare. So if you look at Cloudflare's mission, they are on a mission to help build a better internet. And Cloudflare is help working with all these key customers: Mars, L'Oreal, DoorDash, Garmin, IBM. We also have Shopify. Most of you know Shopify. So these guys are really a prominent leader when it comes to both content delivery network as well as protecting your website and your cloud-based properties. Let's go into some more details of the company, look at the profile, and take it from there. So Cloudflare, it's basically helps with the provisioning of a cloud-based services and to also secure your website. And company stock price is around 69.43. Today itself, it jumped about $7 or so. And this company runs largest networks. 10% of nearly 10% of Fortune 1000 paying customers and 19% of top 1000 websites they use Cloudflare. And market cap is around $21.44 billion. And they got a charismatic leader in Matthew Prince. He's also co-founder. I love when there is a co-founder at the helm because they truly have company's best interest and they want to really lead the company to success. And if you look at the chart itself, very, very impressive stock chart. Company started back in September last year. And as you can see, very impressive stock chart. And they've been gaining popularity and signing up huge, big customers and retaining customers very well. And now, with all the rotation coming up from vaccination and all these things, there is a rotation from these high flying growth stocks into some of the value and recovery stocks. That's why Cloudflare also kind of dropped in the meantime. And for people like us, this is the best opportunity to one of the best opportunity to buy this stock and stay in for long term. And the CEO, Matthew Prince, he has got several patents. He's not just a sales guy. He understands the product in depth. He has several patents. And, if you look at LinkedIn, people really say he has the intellect, but he also has very good charming demeanor. So that's what's required to run a company. Not just the intellect, but you also need to lead the company, charm the people, and influence the people. So great thing about Matthew Prince is he's got both. He can lead the company, he's got the technical know-how, he's got the charming demeanor. He can really, take the company to success. And he also has a BA in computer science from Trinity College and a MBA from Harvard Business School. And if you look at the news itself, Cloudflare is named as a leader in DDoS, which is distributed denial of service attack mitigation services. In simple terms, they basically prevent the threat and from the malicious actors. Next, RBC Capital says Cloudflare is, they're maintaining Cloudflare as a outperform. So basically, all these analysts are really maintaining them as a very, they're upgrading them, which is a good story. And from a competitor perspective, they've got several competitors, as you can see: AWS, Akamai, Google, Microsoft, all these folks. But what's neat about this Cloudflare is they're really gaining the traction. They have cutting edge R&D, and they're really growing in popularity. They're signing up big customers. And from a performance perspective, if you look at weekly, monthly, they have dropped a little bit, from a weekly, month, and quarter perspective. But on a 1 year basis, they are still at 171.28. Year to date, which is just 2 months or so, they dropped a little bit. They also have some short ratio because folks are trying to take advantage of higher stock price. Maybe they shorted somewhere at the top, near the top. Now they're reaping the benefit. I'm sure this will fade away. It's a great company. If you don't own the stock, I would recommend buying on a weakness, especially now stock is into a little bit weaker mode. I would recommend. Now let's go into a little more details of the company and look at some numbers. From a fundamental perspective, if you look at here, what we have here is we got quarters. We got December quarter, which they just closed and announced, and we got several quarters here. This is a relatively new company, so it doesn't have too much history from a public statement perspective. But if you look at the market cap itself, I like the steady acceleration in market cap. Back in December, it's 5 billion. Now it's 23 billion. So it's a very impressive market cap growth or acceleration. I like to see this because that tells me they're really gaining the momentum and grabbing the customers and really handing it to the competitors. And if you look at the revenue itself, nice acceleration in revenue: 73, 83, 91, 99. There is no blip when it comes to revenue acceleration. I love this also. And from a year over year revenue, they got 54, 50. Very nice revenue growth. I like to see double digit revenue growth, but I'm very impressed with 50% revenue growth year over year. And they surprised the Wall Street with their revenue surprise all along. There is no single hair on this. It's always positive surprise. And also, if you look at the number itself, very impressive number. They've been surprising, in terms of multiple $1 million surprise, which is really good. And on the EPS front, they've been surprising all along, with the exception of 930 back in September last year. They had a 1 penny miss. But otherwise, on the EPS front, also, they've been surprising all along. And I like the impressive gross margin in the 76-75 range, which is very nice. That tells me the company is doing really well when it comes to efficiency and the bottom line. And they're still not making money from a net margin perspective. Very understandable, because these companies are really spending on themselves. They want to become good. They want their product to be superior. Understandable. Wall Street also understands it. It's okay to spend on yourself to grow the company. And one thing I always look for is R&D. They've been spending on the R&D consistently, which is key to become a successful company. Which is a good story. I think Matthew Prince also made a statement in the earnings call. He's going to continue to spend on R&D, at least a good portion of the revenue. And from a cash perspective, they got good amount of cash, as you can see here, $1.34 billion cash, and they've been consistently having the cash on their balance sheet. And when it comes to long-term debt, they do have some long-term debt. So I think back in 6/30 January, sorry, June 30, they got some good amount of debt on their balance sheet. They do carry the debt, which is okay because they've been investing in their own R&D. I think this debt itself makes it a little bit better. And because they are growing in the revenue, I think it's okay to have some debt, especially because their top line is growing. And From a price to sales ratio, they're a little pricey, but I think it's understandable. Wall Street also understands, growing companies like Cloudflare can have a higher price to sales multiple. And they have, their shares outstanding is pretty consistent, around 296, 300. So if I see the shares outstanding, ballooning up, that will throw a concern. But here it's a pretty steady. It's around 300 million outstanding shares, which is not bad. And if you in the quarterly statement, they also said they, for the first quarter of 2021, they expect the total revenue to be 130 to 131 million. So they're at about 125 million. So there is, they're giving some positive acceleration on top of what they've done already, which is a good news. So it's a good revenue projection, I would think. So I think Wall Street is also okay with that. So with that, let's go into a little more details and see what we hear from earnings transcript itself. Uh, from an earnings highlight perspective, this is on February 11th, they had the earnings. Few callouts here. First one is, on the fiscal year 2020 highlight. So first one, increase of 50% year over year revenue. I think it's a good story here. Their revenue is increasing. Unlike many companies, we are who are reducing the revenue, this company is really increasing the revenue year over year. And they're also making progress on the operating margin, as well as they are making progress on the actual. I think it's mainly the operating margin itself, which is a good story. The dollar-based net retention itself, it's a very healthy number. I think it's companies would love to see this 119% dollar-based net retention. That tells me they're basically keeping these large enterprises as their customers and continuing to keep them as customers. And they are also growing their customer acquisition. So the paid customer growth itself is more than 100 11100. So it's really tells they are really doing a good thing. They're growing their customer base, and more importantly, the large customer base is also it's a strong growth, which is a good story. Now turning to quarterly results. On the quarterly result itself, on a quarter by quarter basis, they have made 50% increase in the revenue year over year. They're comparing Q4 2020 to Q4 2019, which is a 50% acceleration in revenue, which is a good story. And there is also gross margin improvement. I think it's there is a gross margin was 76.9 compared to 78.3, which is a good story. And they also have some operating loss, which is understandable. Companies really investing in themselves. They also have some net loss, which is okay for the growing companies. Um, and they also, I think they have narrowed down or reduced their negative cash flow, which is also good. I mean, their cash flow itself is negative at this point, which is okay. Overall, I feel good about the 2020 highlight as well as 2020, the fourth quarter highlight also, which there is no negative here. It's a good story. Next, we'll look at the outlook itself. From an outlook perspective, they are expecting 130 to 131 million, which is a little higher than what they've done in the last quarter, which is a good thing. And I think we talked through this. We'll skip over this. Overall, it's a they're painting a little bit acceleration from what they have done already. Next, let's look at some of the performance numbers. From a monthly performance perspective, Cloudflare had done really nicely. They've got one or two bumps along the way back in December and October, a little bit in the August. Now, after the, now also they have some, after the earnings, they got some bump in the road. So any of these bumps in the road for this company is a great opportunity to buy. So these are all buying opportunities. Now, if you look at the weekly performance itself, February 11th was their earnings call. After that, after the earnings, as you can see here, they dropped on a week by week basis. Um, you know, it was a little bit in the beginning, just the week of earnings, and then it accelerated a little bit with the shift to recovery stocks. Now it's kind of moderating, so I would think it's a really good time to buy some, because we know it's moderating, and the sellers are getting exhausted and buyers are stepping in. Now, if you look at the daily performance, somewhere here, February 11th was the earnings. After that, they had a big drop and then a pop here. After that, they had been having some drops, a pop. So, as you can see here, now they are, really stabilizing. I think now it could be good time to initiate a small position if you don't have already, or buy some more and add to your position if you have some. And now let's look at some more details of Cloudflare and see what should we do going forward. So if you look at the insider transaction itself, there is nothing glaring to me. All these insiders, they keep selling once in a while. As you can see here, the Matthew Prince sold some shares around around this price here on 24th, 25th, 23rd. I think he waited till the earnings to be done, and after the earnings, he sold some share, which is understandable. And I think nothing glaring. It's basically these folks have got some expirations coming. Probably that's what it is. Now let's go into um, the chart itself from a technical perspective. Does it make sense? So this is a 2-year chart, but as you know, the company barely started back in last year. There is not too much history. Company itself, as you look at the stock price, it's been doing very well. It had some bumps along the way, but it's really doing nicely. And it's coming below the, I think this is a 100-day moving average. It came below that. Now it's trying to bounce off. It did not even reach the 200-day moving average. I think it's a relatively good story. I would buy at this price. If you don't have it, I would initiate a position and take it from there. Now let's look at a little more detail in the chart to really see some of the technical indicators. And if you see here, this is the same chart. It's still in the bullish pattern. It's about their 200-day moving average, and also it's within the standard deviation tunnel, which is a good story. It's in a positive range. And if you look at the RSI, Relative Strength Index, now it's really in a oversold territory, which is a good story. I think slowly it will make its way up. I think from a technical perspective, from an RSI, Relative Strength Index perspective, you're not paying too much money right now. You're paying, right kind of money. It's a good purchase at this point. Implied volatility typically drops after the earnings. So right now it's about 31%, 31.9 IV percentile. You're not paying much. Even if you're buying a call option, delta 70 call option, it's okay, because you're not paying too much money. Implied volatility is relatively low. Next is DMI. If you look at the DMI, this is typical. Most of the time you got to have conviction to buy the stock when the chart is ugly. Same story here. Chart is ugly. If you look at the DMI, typically you would buy when this blue line is above the red line. But in this case, it flip-flopped just after the earnings call. But I would not worry too much about it. I will tell you why in a minute. From an on the balance volume perspective, it's really kind of stabilizing at this point. I would think it's it's not low, it's not high, but I'm not worried too much about the on the balance volume, because it tells me people are still buying the stock and the volume is relatively okay on the higher end. Now, next one we have to look at is really chocolate money flow. If you look at the money flow itself, it's kind of in the mid range, which is a good story. And by looking at this chart itself, I feel like we're in a good position. I think it's okay to initiate a small position if you don't have it. especially by looking at this company and looking at this leader Matthew Prince and the employees who are really well regarded and they're giving very good opinion and ratings on Matthew Prince. I feel very comfortable this company is positioned for the future. Next, let's look at what should I do now. We looked at the chart, we looked at the numbers, we looked at the fundamentals. Everything is looking good. What should we do now? So if you look at the future, Cloudflare, their DDoS, their cyber security type area, it has received a lot of good kudos, including the Forrester Wave. They basically applauded this company. And because more and more companies are shifting from on-premise to cloud, this is where Cloudflare is really strategically in a good place to take advantage of this shift. And they also have a compounded annual growth of 50% or more over last 4 years, which is a good thing. Many companies would really love this type of compounded annual growth. And they've got a healthy gross margin. We looked at about 76% gross margin, which is a good story. And they're also growing the customer base and also adding more high paying customers, which is a very good story. And because of all these criteria that we looked at, I am very comfortable and I'm bullish on this stock. Myself, I'm buying the stock on a weakness. I added some to my position yesterday and continue to monitor the stock. I would be buying on any weakness. So with that, thank you very much. Happy investing.